Telling me that it was a mistake. Don't make it hurt less. It don't make it hurt less. I think we're live. If we are, you got to hear a snippet of my new album. I'm kidding. I don't have an album coming out. To the control room here. Alright, we're going to go bar by bar, 1 hour, guys. Alright, alright, alright. We can start on this bar right here. We're going to make it a little bit of fun here. Hold up. Make it a little more fun. We're gonna trade the micros with it bar by bar. Okay. Alright, let's bring it back. MES. Alright, you guys know the drill. I gotta guess the bar within within 4 minutes. I gotta guess how the bar is gonna close using nothing but moving averages or volume and price action. We're going to make it more interesting this time. We're going to actually put some money behind it. So, we got some wicks here. I don't want to short this trend, but I'm going to predict that this is going to be a red candle. So, let's bring out our red prediction here. Signpost. Why is that so damn big? I don't understand. Maybe it's because the text is large? No, I ain't got nothing to do with it. Alright, we're just going to go whatever one's in front of me, whatever one's right here, that's the one we're going to do. Whatever one is over here, we're going to make it to where that's not the prediction. I'm going to put a line here to denote that. So, left of the yellow line, no prediction. Why don't we do this? There we go. Make it real simple. That way it doesn't have to crowd the price action and everyone can understand it. Make it a little bigger. Move this timer over by me. Here we go. So we said this was going to be red. Let's see what kind of trend lines we can draw in here. I do have volume profile on here. Let's get rid of it. I got a new book today, guys. You know, I'm constantly learning. I'm constantly trying to improve. I was watching a Chat with Traders, listening to a Chat with Traders podcast, and the guy mentioned this book here. I don't know if it's going to blur it out because it's chroma keyed, but Technical Analysis and Stock Market Profits, the real Bible of technical analysis. This bitch is thick. This is like 260 pages. It's got charts and stuff in it. It's got everything. I'm gonna try to get through it this week because I read pretty fast, and then I'm gonna go back and go through it with a highlighter and try to get some value out of it. And if I get anything out of it, I will come and put it on the channel. But it's like $40 on Amazon. Actually, it was like $50. It was like $50. It was not a cheap book, but I think it might pay for itself. So we got faked out on this one here. I said it was going to be red. It's definitely green. So we taking our first loss here. 0, 1, 0 winning percentage. All right. Let's go ahead and put one on here. I'm gonna say green prediction here. So we got a trend line. Let's see, got a trend line here. I got some long calls for BABA and DD for July 1st on DD and actually this Friday on BABA. So if we gap up this morning, BABA's got a real chance of being a big gapper because it's been gapping up crazy lately. So maybe I can get a quick pop in that, quick $10 gap up, make $500 or something like that, and buy myself a, I don't know what I'd buy myself. So you got long wicks up here. We've tried this a couple of times, this area here. Tried this area here multiple times. Three minutes left in this candle. Big bullish or bearish volume here. Nice spread, wick at the top. This could be a red candle, but I've already predicted it green, so I can't go back on that. But we're going to trust this trend line down here. We're going to look to add on there. Let's see here. Let's see where we've been bouncing here. Got a supply zone here. Got an imbalance here and here and here and here. So imbalance here and here. And this lines up perfectly with that trend line. So I am looking to be a buyer in this area again. Let's pull up this 30-second chart also. Okay, getting a big red candle here out of this spread here. I don't need all of this. I don't need ATR. So I think you guys will see me till I get the account over, let's call it 200K. You're going to see me trading a lot of micros because you can manage your risk so much better with them, and you'll pay more in commissions. But if you just take a tick and a mini against you, you've paid commissions in I want to say you've paid commissions in 4 round trips of the micro. So I can't be really worried about commissions, and I always say that commissions, they're not the reason you're not profitable if you're trading futures. It's always your trading. So I want to be able to manage my risk a little bit better, though. You guys saw the trading I did on Friday. It was not very impressive. There were several opportunities for me to get out, and I did not take those opportunities. So I was a little aggravated with myself on that. I'm glad we had this 3-day weekend so I can kind of rewatch everything a few times and then, just relax. A very relaxing couple of days. Alright, so this candle was green. No, it was red. We predicted green, so I've now lost twice. And my P&L reflects that. Let's try to see what this candle's going to do. We had a long wick to this downside. Lots of volume. I think my timer's covering up the volume. Let's move it over here. Is it going to try to fill this wick again? Got about 6 seconds to decide. I think we're going to be green. Predict this 5-minute is green. That big wick should support price there. Where did it wick to? Right above this. So in a short-term downtrend on this 30-second here. All right, look at that bar go. Oh yeah. I like that. Oh, yeah. See, this would have been something, had I been short, it would have caught me and bit my ass. Look at this volume coming in here, though. Taking out a lot of bears. Taking out a lot of bears. So if this had been a mini, this would be $425, but it could easily went the other way. But I like to trade, and I know this is contrary to a lot of channels out there and some of the stuff I've even put on this channel, but I've noticed that it fits my style better. I like to trade with no stop loss. I like to do a mental stop. I like to be my own stop loss. I like to tell myself when to get out of the market. And so I open myself up for moves like this to happen to me, and which is another reason I want to start trading the micros. and not being so huge when stuff like this happens. But I trust myself to press the buy and sell button when I'm wrong. And am I going to be faster than the computer if the computer hits the stop and fills me? No. But am I going to be, is it going to even out if it wicks me out? Like if it just comes down and wicks and then shoots right back up? Or, you know, wick, whatever, wherever my stop is, if it just wicks my stop and goes back up, that happens to me all the time. And I get pissed off about it because it goes exactly in the direction that you thought it would go. And I'm thinking to myself, why didn't you just, you know, if something's going to break out, for instance, let me just do this. If this was a green prediction, by the way. If this line is going to break, say it gets down in this line and I buy about right here. If it gets right here and breaks below and wicks and comes back up, you know, in other words, I want to see it trade down here for a little bit. Alex, weren't you short earlier? Did you flip your short to long? I've been short this whole way down, but I'm not. On one of my videos recently, I told you I was going long on Baba and long on DD because I thought we would do a relief bounce. So I have not been short on those. But day to day, I mean, I just take it day to day. If it's a short day, I'm going short. If it's a long day, I'm going long. But overall, I'm short. I'm waiting for this to reverse. But going bar by bar. So we got that one there. Going bar by bar, I want to be, you know, whatever it's doing at the moment. So we got that there. I don't even have to calculate that. That's a 33% win rate. And we are in profit here. Let's see if we can predict this bar. So wick on top of here. Huge volume for an overnight. Look at this. This is a surprise right here, guys. That's 5,000. That's 5 times the volume of all these candles back here. That's 5 times the volume. I do think this bar is going to be red, though. So I'm going to drag this prediction over and put this one here. I think we're going to get a red candle here. But yeah, I'm not like long or short, you know, like perpetually, but I believe we're going to have a relief day soon. It might be today. So right now we're up. After this, probably 50 points, 60 points. Right now we're up 60 points. Okay, and I only say that because the volume, look at how little movement they got out of this volume here. Look at this volume here. Look at the spread, big spread. Look at the volume here, almost identical. Almost identical. This was 1.4 million, this was 1.38 million. Look at what they got out of this. So when I saw this slowing down in momentum, that's when I said, okay, we're ready for a relief day. We're looking for, or I'm looking for at least a 50% retracement before the market decides where it wants to go. And for me, that's from here, from this high here to this low here. So we're looking to come, I'm looking to come at least to here, to 39.28, maybe 39.50. So that's where I'm looking to come to. So, yeah. Let's check out the 50% retracement so far on the way down here. Let's see here. Look at this swing high to this swing low. Where do we come? Right to the 50%. You guys see that? This high here to this low. Right to the 50% and then dropped away again. Let's do another one. Let's go from this high here to this low here. Went to the 61%, it looks like. Yeah, the 61% then fell away. So I have the 33, the 50, and the 60% on my, or 63% on my chart. That's what I'm always looking for. Activity within those levels. So go back to the 5 minute and see where we are here. I said this candle was going to be red just because of the surprise bull bar here. I'd like to see it retrace some and then pick up here. Let's see where the 50% of this bar is. We already retraced to the 50 of this bar, so we might pull up after this. But the reason why the 50% is so... Oh, look, here's a BABA chart I drew up the other night. It's making a video about it on volume profile. That'll be out soon. I won't go over it here. But don't save it. I've already put it up. What was I getting ready to say? The reason the 50% retracement and the 61% and the 33%, the reason they're so powerful is because you can't, the computers can't see, you know, these trend lines. They can't see these lines that we're drawing. They don't know what a triangle looks like. They don't know what other shapes look like. You know, you can't program them into the system as easily. But you can program, you can say, hey, if you go up 30 points, before you accept prices any higher than this 30 points, I want you to go back down 15 points. Because what you're going to do is anyone that FOMO'd into this 30-point bar, you're going to take their orders from them. Okay, because you know where you want to go. The people with the money know where they want to go, whether it's up or down. So if it's at 50%, and everyone that FOMO'd in here is such a big bar, boom, 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 and they FOMO'd in here, where are their stops? Where they're down here, or they're right here. So all this thing has to do is retrace down here, because it knows the movement that it just made. It knows how many points it moved up. Now all it has to do is retrace down here, and then go back up if it wants to continue up. So it's easier to program into an algorithm, hey, just go back down 50% of the movement that you just went up. That's why that level works out so much. And you know, you'll see 61%, you'll see 33%. I lost this bar, son of a bitch. That's 3. That's 25%. I lost the bar, but I'm still in profit. I think this is how episode 1 went also. And I'm late on predicting this bar, but I still think it's going to be red. The problem is, since the market is fractal, you never know what 50% it's retracing. Is it retracing 50% from this swing here? Because this really wasn't a dip. Or is it retracing 50% from this low here? You know, so you never know what 50% is retracing, but if you can find them and identify them where it's most likely the one it's using, you can figure out what it's going to do, because it will, it's easy to program. Like, it's very simple code. You went up, okay, buy everything from here to here, and then when you're done, stop, let them sell off, let them get into sell positions or whatever. Let them sell, like all sell orders are in this wick right here. That's why it pushed down. So you're going to retrace down here. You're going to take out stops of people that bought halfway through this candle. And then you're going to push back up and take out everyone that sold here. And their sell orders, to get out of their sell positions, they have to buy. So above these wicks, their stops are here. So when you break above this, well, you're going to be triggering them all the way up. But when you break above this, you're going to hit a pool of stop orders. And that's going to take you even higher with a little effort. So they're creating liquidity. The market is always creating liquidity on both sides. Okay, so it can always go either way. Okay, understand that. It can always go up or down because you have all this liquidity here on the bottom. Check this out here. You just zoom in on this 5 minute right here. You had people that bought, anyone that bought here all the way up, okay, they were susceptible to getting stopped out when this ran down here. Okay, this ran down here to stop them out. So that means that since this has already come down here and it was bought back up, everyone that bought in this wick, this candle, this candle, this candle, this candle, this candle, where are their stops? Well, they're all below here. And they're in varying areas all below here. So if the market does want to go down, okay, it's going to come down and use these stops right here, okay? And it might use these stops to break down into this area here, take these stops, and then continue higher. So the market is always creating liquidity on both sides. It can go in either direction at any time, but you have to be looking at structure to see where it's most likely to go. And right now with this volume, and we've tested this low now twice, low here, a little bit of a lower low here, just a tiny bit. This low was 3641. This low was 3639. So 2 points lower here. Okay. Then we shot back up and then we tested it again, but couldn't get lower. 3662. So 30-point difference here. So minus 2 points here, and then plus 30 points here. So we've now broken above this area of resistance. Okay, we've broken above this area of resistance right here on the hourly chart. So if it were to come back, say this was the top of the move, take your fib, draw it here to here, here to here, and you can get an idea of where it might come back to. Now if it comes back to the 50% here, if this price stops right here and comes back to 50%, has it broken any structure to the downside? Right here? It hasn't, because this would be a higher low. This low would be higher than this low, and then all it has to do is push back up. But it punished everyone that bought here. Everyone that bought here, it punished them. Took their orders out and took them to a higher place. So structure's telling me that it's time to go back up, at least briefly. This will be a big test here of this level right here. This will be a big test here if it can get over this level, because everyone that sold here, theoretically, if they didn't get out, they're still in profits. So if they're still in profit, when it comes up, they want to sell some more because they want to take it down lower. So it could very easily spike up, make a double top like it did back here when we called it, all the way back here. You probably can't see it now. Yeah, this is a new contract. It's not going to show me. But yeah, I did the same thing the other day. Came up, went down, came up, went down, came up above this high, and then plummeted. That just happened a couple weeks ago. So I'm missing my bars. I got that bar though. I got this. This bar was red, so I won one. Ha. 2. What is that? 40%. Got a 40% win rate. Too late to call this candle, so I won't pretend that I don't see that it's green. Try to keep it fair here.
Motion detected in your deck.
Hola! bunch of wicks up here. I don't want to lose this right here. I'm going to put a sell stop here. I don't want to lose this. I think if I lose this, it's going to be, it's going to come back lower. Why does this look like this? I want 4 ticks. You got a shelf here. Not a lot of volume up here. Let's show the values on these. Show values. There we go. Make them white. No, make them black. No, make them white. So if it pulled back from the current price, where I would place it, a buy order, I would look for it to pull back. If it breaks the 50, I'm obviously targeting this next one here, the 63. 63, 61, 66, 33, 31, somewhere in these areas. Okay, you're going to see some activity if it wants to pause here. Now, if it blows right through this, you know, it can retrace 100%. It can retrace 100% of this move. And you would never be in because you would never be, you know, you don't just place an order blindly waiting for it to come and hit it. But this candle is going to be green. I'm going to say this is going to be green. I know it's red right now. I'm going to say it's going to be green, though. But the midpoint, if you're counting this as a move, you're counting this as a strong move by itself, which I am, I would expect it to come back till around this area. Okay? But if you're counting this as part of the move, let me show you this here. So we're here right now. The 50%, it's there. If you're counting this, though, as part of the move, because this candle, think of it this way. This candle was born from this demand zone. Okay? You know this is a demand zone because there were sellers interested in selling here. And the buyers had to reassert themselves. That's why you have this wick. So wherever on the chart where the other side reasserts itself, that's a supply or demand zone. So if they reasserted themselves here because they pushed it down below 1, 2, 3 candles, and the bull said, we're still here, we're going back up. So now you have this momentum up. This candle erupted out of this zone here. So if this is going to stay bullish, okay, if this is going to stay bullish, it can retrace all the way back down here if it wants to. As long as it doesn't break below here, this swing is still bullish for me. So I'm looking for here, here, and here, but it could very well come all the way back down here before it comes back up. Okay? So there's never any certainties in this trading, of course. It's all probabilities. But you want to take the biggest probabilistic move that you can. And probabilistically, most things retrace to the 50%. Let's go down here. Let's start at the beginning of this move here. So we had this big move up. Big move up from here. Let's say to here. Okay. I wouldn't really count this dip here because it was insignificant. Okay. I wouldn't really count that. All right. But you can see here that had you been looking for some rejection around the 50% level of this strong move up, you got it right here. Okay, you got dojis, that means indecision. got some indecision. You had a flip from red to green. You had an eruption out of this zone. Okay, remember the buyers had to reassert themselves in this area, and it erupted out of this zone. Okay, let's do the next swing up here. You got a swing from here. Oh, that ain't a swing. Hold on. You got a swing from here. Come on. From here to here. Okay. This time it came to the 63%. Kind of wicked a little bit. Kind of wicked a little bit here. Let's get rid of this one. Okay. But what did it do here? Let's follow this over here. Where does this line up with? Anything significant? I don't see anything significant here. Yeah, I don't see anything significant here. So let's say that time it did not work. Let's go for another one here. Let's go from here, this low, to this high. You got around the 50% here. Retrace 50%. Okay. This area here is where the bulls last reasserted that they were interested in this market. All right. And you see how it came down here, almost touched it. Let's go here. Let's go from here to here, this mini swing here. So you had this move up here, from here to here. Came almost in between the 50 and the 63%. Okay. But look at this swing here. This swing retraced almost 100% of the move, more than 100%. If you call this a swing low from here up, you retraced all of this move. Okay? But then, let's take this swing from here to here, here to here. Look at where it came to before it reversed. Right here, 50%. Okay? 50%. They asserted themselves here. And this is where we are currently in price action. So if you're looking at this move here, where they reasserted control here, is on this green bar right here. So hypothetically, if price stays above this zone, okay, if price stays above this zone, we're still bullish. So price could come down and it could do all kind of crazy things. It could come down. It could come down here. Now if it did this and did this and did this and did this, you could go, oh, higher or lower high, lower high. But until it breaks down below this, where they reasserted themselves here, you're still in a bullish pattern, because what happens if it comes here and goes like that? Well, can I draw a trend line here? Is that not an upward sloping trend line? It's slight, but it's upward sloping. But where do you think it's not going to be a random spot where they return? Okay, they're going to return here for a reason. So you're going to be looking for imbalances, and by that I mean places in the market where only one side was offered. Okay, so we can follow those up too. Let's see. This was an imbalance here, right here to here. It came in and filled it here. You see that? This was an imbalance here to here. Okay, came in and filled it here. Okay, this is an imbalance here, here to here, and it is yet to fill this imbalance. It came a little bit and wicked it right here, but you still got an imbalance from here to here. And imbalances are important in the market, because when the algorithm has to book areas, it has to say, when they come back to check on it, it has to say, yeah, boss, we traded through these areas. Well, did you go back through it? Yeah, we went back through it. We went back over it. There was no one there that wanted to sell. Okay, cool. You sure you went through it? Yeah. So now when all these imbalances are filled in, when you have one left here, okay, so it would be rational for this to come all the way back down, because you have a big one here now also. You have a huge imbalance right here. Only buy side was serviced on this move up. Okay? Only buy side. So it wouldn't be a surprise if this came all the way down here hit this trend line, fill this imbalance, okay, and then went back up. And that would still be a bullish move. Let me get rid of some of this shit here. Getting a little messy. Okay, so we know this imbalance from here to here exists. Right here. And it happens to line up with a trend line. So if you're trend line trading, like I do, you would think, oh, it's coming down. It's going to respect my trend line. And that's what happened. It respected my trend line and bounced off. No, it was coming to fill this imbalance. Your trend line just happened to be where the imbalance was. It's the only one left on the chart. Every other imbalance they filled on the way up. Every single price on the way up they've booked. Okay? So if you see it coming down and you see that there's no more imbalances down here, okay, you have to think, okay, well, this must be a trend reversal. Because if you're not coming down to take these orders here, to mitigate these orders here, then you're coming down to actually start the downtrend. So that's how I think of it, and that's how I flip my biases so quick, because I'm aware of where the market is being offered fairly to both sides. This is an imbalance. That's an imbalance right there. See that? Big green bar. There's no selling in between this. They bought all the way up. They bought it all the way up to here, but then sellers appeared and they sold it back down. Okay? But they bought it all the way up through here, and there was nothing there. There was no sellers until up here. This is an imbalance. I wouldn't be surprised if they came to fill it and went back up. Would that be a 50% move of some kind? It'd be exactly 50% of this move, maybe. 50% of this move, a little bit above it. What about this move here? Let's look at this one. 50% of this move, this would actually be 60% if you count this low as part of this move, which I would count this low as part of this move. So if you come back to fill this right here, you will be filling this imbalance. What's up, Jonathan? How's your weekend been? You look at anything interesting? I got this book. I bought this book. It's called Stock Market Analysis Bible. My screen's blurring it out. They won't let me show it to you. I have to show it to you from back here. See that? I hope I get something out of this. I'm gonna make a few videos about it, but it was mentioned by a trader, Chat with Traders podcast. We were going bar by bar, and I got to explaining shit and totally lost where I was going. But we're still in some profit here. But did that help, Alex, if you're still there? Did that help when we went back and saw all those moves? So it's not that you just blindly place your order at 50% or 63%. You are aware of these levels. So if you start to see things happening at these levels, just think of location. I always think of like where location is so important in trading. Where is this stuff happening? Because a candlestick, this candlestick here, for instance, okay, this candlestick here means a totally different thing if it happens in an uptrend, if it happens at the top of a move, than if it happens at the bottom of a move. Okay? The same with this one here. These mean totally different things based on where they happen in a move. Okay? So if you're seeing this at the bottom of a move, well, this combination period, if you're seeing it at the top or the bottom, this is usually a reversal. Doesn't matter. It's going to reverse. Okay? But you can't play this as a reversal. I'm sorry, you can't play this as a continuation on the bottom of a move. But if this is at the top of a move, you can expect prices to push down. If it's at the bottom of a move, you can expect prices to go up. So it's all about location when it comes to anything. You know, think of like I've said this in other videos. Think of the city that you live in. There's probably more violent parts of your city. There's probably parts of your city where crime is higher. If you're in this part of the city and something happens to your car or something happens to, you know, your person, if you get stuck, you know, people say, well, where was he at? Well, he was on North Grand. That's my part of my city. Well, he was in North City. People are like, well, shit, what was he doing over in North City? Like, an old lady will shank you over there. What were you doing over there? You know, so it's all about location where this stuff is happening. So if you see a doji happening at a level that you know a computer is most likely targeting an imbalance or a retracement level, okay, you can easily say, okay, this can be a trade idea. Because it doesn't matter if it happens anywhere else. If it happens, you know, it doesn't matter if it happens anywhere else, I guess is what I'm trying to say. You want to trade in locations where things are likely to happen because the probability of this being a good signal for your trade is higher than if you were to see this candlestick somewhere else on the chart. So that's what I want you guys to think about, and that's what I always try to think about when I trade. Where in price action, what is the context of the price action? Where is it happening in? Am I getting a wick at the top of a move like this? Getting this long wick after 3 pushes, 1, 2, 3 pushes. Okay, well, we might be ready to come down for a bit. Okay, that doesn't mean sell my long. It means probably get ready to add on. Right? I come to this trend line that I've drawn. It's had 1 touch at this point, 2 touch. It gets to this line. It starts to wick. Takes out the high of this candle right here. Okay, takes out the high of this candle right here. Okay, I'm entering. Where's my stop? It's close. My stop is tiny. It's down here. It's 3 points away. But what do I get out of this? I get 9 points. I get 3 to 1 before I come back down. Okay, before any type of retracement. So you just want to put yourself in situations where there's likely something to happen at a level. If you see it happening or getting ready to happen, dive in. And if you're wrong, you're not going to fall very far. Okay, you don't have very far to fall here if you're wrong. Now, if you wait till here to buy, you wait till this second candle, you want more confirmation, you wait till this candle's taken out. Look how much you got to fade here for this trend line breaks. It's almost double. So I just look for low risk situations, like where on the chart is it a low risk probability for me to get in, because I don't know what's going to happen next. And that's what you have to realize. You don't know what's going to happen next. No one does. Anyone that tells you they do, they're lying. But if I'm in a bad part of town at night and I see a guy approaching my car, doesn't matter if he's black, white, Puerto Rican, Mexican, Indian, whatever. I see a guy approaching my car with his hand in his pocket with a hoodie. I'm not going to wait for him to pull out a gun. Okay? I'm going to speed off. Okay? What is he doing with his hand? Why is he looking menacing at this time of night in this location? He's probably up to no good. You know, so I'm not going to wait until he shoots me to go, oh, he got me. I knew he was up to no, you know, and that's what people do. They see this stuff happening on their charts, and they go, oh, this might be where it's going to bounce. This is on a trend line. Oh, let me get in. I might get in. I want to get in. And then these big bars erupt, and then they FOMO into the top of the moves, and they get stopped out. And that's what you have to do. I mean, that's why I use trend lines, because they give me the courage to get into the trade, because that's what I lacked for the longest time. I lacked courage. So I was just stopped out of this order. About $28 profit, looks like. So let's see if it comes down and refills this imbalance. This imbalance right here. Got one down here too. Don't forget that. And all the way up, all of this has been booked. None of this has been... You have no more imbalances here. This one was filled on this. This one was filled on this and this. This one was filled here. This one was filled here. Look at that. Look at that. This little wick here. This wick filled this imbalance here. Yeah, there's nothing. There's nothing here. There's no reason for it to break down below this trend line right here. Okay, so if it comes down to this area, and starts chopping around, I'm getting in the trade no matter what. Because I don't have very far to fall before I realize that I'm wrong. Okay, if I get in here, say the middle of this zone, I can risk, shit, if I had an E-mini, I could risk $300. I'd probably put it below this low though here. I could risk 4 or 5 points, but look at what my upside is. Let's pull out one of these. Long position. I'm here. I risk this. Because this is an imbalance here. It's a very small one. It's a very, very small one here. Very small. Wick to wick. So say I risk that. Say I risk that right there. 5 points. What do I have to gain? Because if we're going up, we're going to break this high, right? 3.5 to 1. I can get this wrong. I can get this type of trade wrong almost 4 times. Get it right on the 5th time and break even on it. That's huge. That's huge. And chances are I'm going to get this right more than twice. So that's what I look for. So I'm looking to get in again at this trend line. Or if it comes down and fills this imbalance and starts acting funny around here, I'm going to get in again. So. You like that analogy, Jonathan? Location is everything, man. What's happening in the location? You know? I don't look for lions at the aquarium. Why? Because they're at the zoo. You know, if I saw a lion floating around a tank, I'd be like, what the hell is this? What kind of zoo is this? So, location. Got some merch for my channel. You guys see? Maybe it'll show you. Bow. It's my logo for my channel. Got it on some apparel too. You see that? Different apparel, different colors. I got hats and shirts, and I don't have scarves. I was gonna say scarves. I got hats and shirts, and I wear it to the gym, and people are like, "Ooh, what's J Money?" It's like, "Oh, it's my channel. Here, go here." So yeah. Well, I started out predicting, and then it turned into a rant. Now I don't know where we are, but I know we got 7 minutes left. That's why you see me using volume profiles on the swings, Alex, because it gives me levels of interest. Like, it just gives me more trading opportunities. So right now, I have a trend line. I have 2 imbalances, okay? And if I put this on here, I have levels. I have the POC, and I have little ledges where price might react. So if it comes down to this ledge right here, and it's acting funky like it did here, okay, we know this is the most traded price because look how long it stayed here. Look how long they agreed on price before the bulls agreed to pay higher and they shot up here. So you would think that every bull that bought here doesn't want to get below this area. They don't want to get below this area because then the orders that they bought are going to be in jeopardy. Yeah, I love Bollinger Bands too. I don't use them a lot just because they clutter my chart, but let's put them on. Let's put them on for fun. I can kind of visualize what a standard deviation is. If you see like the 20, I can kind of visualize what that is. Believe it or not. But yeah, Bollinger Bands are great. What a great idea that was. But yeah, so I'm just looking for areas to get trades off at. You know, and if you find areas where multiple things line up, like if this node was sticking out at this trend line inside Well, it wouldn't be inside an imbalance because it'd probably be a lot of, or not a lot of orders traded there. So you couldn't have a POC inside of an imbalance. But say I have a trend line, and then I got a trend line, I got a lower Bollinger Band, I got an imbalance. I got 3 things here that other traders are looking at, and these only work because other people are looking at them. Okay, make no mistake about that. They only work because other traders that use them are using them. So when you get here, you're going to get the support from the guy that uses Bollinger Bands. You're going to get support from the trend line guy. You're going to get support from the volume profile guy or the algorithm. And you're going to have an influx of buying, and price is likely to bounce. That's high probability for me, right? High probability. And if I'm wrong, I take a small spill, close the trade, move on to the next setup. But this is why I love trading. It's like a puzzle, you know. It keeps I love that it's hard. I love that it's difficult. I love that not a lot of people can do it. I love that sometimes people look at the chart and they're like, what the hell is going on? Because that means that the reward is high. Okay, when you have something that's difficult to do, the reward is typically high. And because most people aren't going to, if they do find something that works, the second it stops working or the second they take too many losing trades, they're going to switch to something else. You've probably already stumbled upon the holy grail. You've probably already stumbled upon something that was 70% win rate, but you took 30%, you took your 30% losses all at the beginning. You were like, this shit, I ain't using this. This ain't working, right? So you have to stick with what you know. And that's why when I read books like this, when I'm constantly reading material and I'm constantly learning, I don't add this stuff to my trading right away. Like, I got to back test, I got to, paper trade, I got to do all types of stuff, because when I'm designing a strategy, I want it to be something that I understand, something that I know works, not just something that I read, even though, a very legendary, really, trader recommended this book. I don't know if this shit still works. This book is over 50 years old, so I don't have the confidence to take trades if someone else is telling me how to take them. I have to be able to do it myself. And that's why I teach so many different things on this channel, because one of the times I'm teaching some, you're going to go, I like that. I like that volume profile. I like volume spread analysis. I like Bollinger Bands. I like trend lines. This is what I'm going to try to do. And that's what you're going to gravitate towards. And you'll know when it's your strategy because you'll feel at ease when you trade it. When you're trading some shit you don't understand, you're nervous all the time. You're nervous to buy. You're nervous to sell. You don't know what to do. So when you're trading something that fits your personality, that you get, that makes sense to you, you have more confidence when you trade. And it's psychological. Like it's mainly mental. Like, you have to have confidence when you trade. When you trade, you're trading your beliefs. Okay, you're not trading anything else. You're just trading your beliefs. I believe this is going to happen. How much money is it going to cost me to find out? Well, let's size it right. If I'm in a micro and I want to fall 5 points, it's going to cost me $30. If I'm in an E-mini, it's going to cost me $350. Okay, and that's all trading is. You have an idea, you have a thesis. How much money is it going to cost you to find out? Right? That's what you do. That's what you do all day long. You just have to size it up right and make sure that the cost that you set is what you're going to pay. Okay? When you choose to hold it past what you said you were going to pay, that's you breaking a rule, that's you making a mistake, and that's your own fault. But there's no reason now with micros why anyone can't learn to trade. Anyone can't, get into this business, because it's all a matter of what's this doing here? Sorry, it's all a matter of probabilities. Like, so you see this ledge here. You had 1,000 contracts come into the market right here so far. Let's go here. This is probably the POC now. Yep, look at that. It's the POC. So you had 3,000 contracts come into this market. Look at this distribution here. Look at this gap Tells you not a lot of orders were traded here, but look where it comes to. Look where it thins out. Thins out in the area of imbalance, right? So if you get a move through here, you expect it to be quick because it was quick moving up through it. There's not a lot of trading here. When you get back to this zone here, if they break above this zone, right now this is sell volume. Right now the buyers were slowly but surely churned out and overwhelmed by the sellers. That's why we're below it. Okay? All of this volume, that's why we're below it right now, because it was sell volume. Okay, the majority of it. So if you get a push, back up through this, okay, and you move far enough away from it, how far do you move away from this area before everyone that sold here starts to cover their positions? Okay? Because they're no doubt going to try to sell as it approaches this. Okay? As it approaches, they're going to sell. And if they get ate up and it pushes through this level, how far does it go before they realize, okay, time to cover? And then you get a nice green erupting bar. Get a nice green bar erupting from this position right here. That's my theory. That's my thesis. Now, how am I going to get on board to find out? How am I going to get on board? Well, I want to see this congestion right here. Where is it at? I want to see this congestion break. I want to see this high break. So I'd put my order here, long position here, above this high. I put my stop below here. I probably put it below here. And my target would be up here. Well, this is the wrong way, but you guys get what I'm doing. Deviation 3. So standard deviation is, they say that 95.9 or something ridiculous like that of price is in 2 standard deviations. 2.5 deviations, I think, is 99%. I have not ever done 3 standard deviations. Let's see. I've done 2.5. Yeah, so this was definitely an anomaly here. So we get this big eruption from this zone here, like I was just saying. Everyone that sold here sold it down. They're going to be in trouble. But support and resistance, it has to get above it enough. Okay, think about how you buy and hold. Think about how you buy and sell. If it just pokes above it, you're probably not getting out right away. You're probably not, you're like, okay, whatever. And it goes a little bit higher, you're worried. But once it breaks this high, for me, really, once it breaks this high, you've done something you've never done before. And whenever the market does something it's never done before, if I'm in the position, I'm happy because I know I'm in the right direction. If I'm not in the position, I'm not happy and I'm taking notice. 9 times out of 10, though, I'm going to close that position. So if I'm short right now and this thing spikes up here, I don't care if it wicks all the way back down here. You had enough strength to get up here. I'm not comfortable being short. I'm staying out. I'm scared. I am scared. Not afraid, scared. So whenever the market's doing something it's never done before, watch out. Be aware of it. Okay, it's about 11 o'clock. I'm going to live stream all day tomorrow. I'm going to do this strategy that I haven't shown anybody or talked to anyone about. I'm going to do it live. I'm not going to be talking like I am now. I'm just going to be trading. So if you guys want to tune in, I will be here from 8 p.m. Central Time to probably about noon. And we'll see if it's a winner. And then from noon to 1 while the market's... 11 to noon while the market's acting crazy like it does every day. I will go over the strategy and how I thought of it and what I think it's doing. Hopefully it wins. I don't know if it's going to win. All right, guys. I'll see you in the next one. Thanks for stopping by. Thanks for chatting with me. Peace.